Good morning, children. So, here we are starting with the new chapter, that is meaning, objectives, and terminology of accounting. This is the part 1 of the chapter. So, let us begin. First of all, let us discuss the meaning of the word accounting. So, accounting is the process of recording. Now, accounting is the process, that means it keeps on going. So, accounting is the process of recording, classifying, summarizing, analyzing, and interpreting financial transactions. That means how many things we do in accounting? We record, we classify, we summarize, we analyze, and we interpret. What do? We record, classify, summarize, analyze, and interpret. And what? We do these things with the financial transactions. That means those transactions or those buying, selling, payment, receipt, which can be basically measured in terms of money related to economic events, that means finance related or money related events of an organization in a chronological order. Chronological order means date wise order. That means 1st January, 2nd January, 3rd January, and so on. That means in a date wise order. So this is the meaning of accounting. Accounting is the process of recording, classifying, summarizing, analyzing, and interpreting financial transactions relating to economic events, that means finance or money related events of an organization in a chronological order, that is date wise order. Now, the definition of accounting. So, this definition of accounting is given by the American Institute of Certified Public Accountants. According to this, the accounting is the art of recording, classifying, and summarizing in a significant manner. That means in a very important, efficient manner, and in terms of money transactions and event which are in part or at least of a financial character, and interpreting the results thereof. So that means, in the words of American Institute of Certified Public Accountants, accounting is the art of recording, classifying, summarizing everything in an important manner related to money related transactions or money related events, that means happening in an organization which are related to money and finance related, and interpreting the results thereof. That means what is the result out of it. So this is the definition of accounting. Now, the objectives of accounting. Why do we need to prepare the books of accounts? Why do we need to record, classify, etc.? So, the first objective of accounting is to maintain the records of business. How many goods or how much amount of goods have been sold? What is the amount of purchases? How many expenses have been paid? What are the incomes of the business, etc.? So, it maintains the records of the business. So it involves identifying the transactions of financial nature, measuring them in terms of money, recording them in the books of accounts, and classifying them under appropriate heads. So basically, what does accounting do? Accounting helps in identifying the transaction of financial nature. That means, in order to identify or make out that which transaction is related to money, that means which is to be recorded in the books of accounts, and measure them in the monetary value. What is the money value? 10,000 rupees or 50,000, like that. Then to record them in the books of accounts and classify them under different categories. Objective number 2 is the calculation of profit or loss. So accounting helps in recording, and therefore it helps in calculating whether the business is having profit or the business is having loss. So every business firm wants to know whether it has earned a profit or suffered a loss during the period. For this purpose, a statement called the income statement or profit and loss account is prepared to compare revenue and expenses to ascertain net profit or net loss. So that means in books of accounting, The accounts or accounting helps us in knowing whether the business is earning profit or the loss. It can only be understood or determined after comparing the expenses with the income, or what we have spent, comparing it with what we have earned. So for this comparison and for this calculation of profit and loss, a separate profit and loss account is prepared, which helps in knowing the net profit or net loss, and that is obviously a part of accounting. Now, the third objective of accounting is depiction of financial position. That means accounting depicts or shows the financial position of a business. That means how strong a business is, whether the property of business is more or the loans of the business is more, etc. Whether the financial condition, the monetary condition of a business is nice or it is bad. So, a statement called the balance sheet is prepared by a business firm to know its financial position at the end of a particular period. It shows the assets, liabilities, and capital of the firm. If its assets, it shows the assets, liabilities, and capital of the firm. If assets exceeds the liabilities, that means the property of the business is more than what it has taken as loan or borrowings, then the firm is solvent. That means business is in a good condition. Otherwise it is insolvent. If the loans and the borrowings of the business is more than the property, the owned money of the business, then in that case it will be considered as an insolvent. That means the business is not in the condition to pay off its debts, its loans. So this financial position is also depicted, or it is aimed to be depicted, therefore it is done by the accounting. So for knowing the financial position, a business prepares a balance sheet. Then the fourth objective is to make the information available to various groups and users. There are a number of people, government, public, investors, owners, employees, etc. A number of people are there who are very much interested in knowing the books of accounts and the accounting information of a business. The objective, their purpose is different depending on the nature. Owner wants to know the accounting information so as to know whether the business is having profit or loss. The government wants to know the accounting information to see whether the business is paying the correct amount of tax or not. The employees want to see the accounting information whether they are getting their salaries fair enough or not, etc. So, in order to provide these people, these interested parties with the accounting information, it is the aim of the accounting process or accounting to provide them with the accounting information. So, another purpose of accounting is to communicate the financial facts about a firm to various interested parties, example, owners, investors, creditors, employees, tax authorities, government, research scholars, etc. On the basis of such information, these users of accounting can take sound and realistic economic decisions. So, these information is provided by accounting. Therefore, it is the objective of accounting to provide the interested parties with the accounting information for different purpose and for making decisions, etc. So, these are the four objectives which we have discussed about accounting by far. Now, let us understand the another word, which is bookkeeping. Bookkeeping is merely that it is only the recording and maintenance of financial transactions relating to economic events of an organization in a chronological or date wise order. If you remember, just now we have discussed the meaning of accounting, which says that accounting is the process of recording, classifying, summarizing, analyzing, and interpreting the financial transactions in a chronological or date wise order. That means we do everything in accounting, right from the recording to interpreting. But when we talk about bookkeeping, we are only and only concerned with the recording part. That means we simply record the day to day financial transactions. That means those activities in the business which are related to money, which has changed the financial position of the business. We, in case of bookkeeping, we just record all those transactions in a date wise order. How much have been goods have been purchased, how many goods have been sold, what is the amount, what is the amount of expenses, where the incomes have been generated from, etc. We just record. We do not classify, we do not analyze, we do not summarize, and we do not interpret in case of bookkeeping. We merely record. So this is the meaning of bookkeeping. Now, the definition of bookkeeping, which is given by J.R. Bartley Boy. According to J.R. Bartley Boy, bookkeeping is the science and art, means it involves the rules and regulations and the skills of recording business dealings in a set of books. That means, according to J.R. Bartley Boy, bookkeeping is simply the science and art of only recording the business dealings or business transactions in a set of books, that is, in books of accounts. So accounting is concerned with all the things: recording, classifying, summarizing, analyzing, and interpreting the financial transactions in a chronological or date wise order, whereas bookkeeping is mainly concerned with and only with the recording of financial transactions. Now, the difference between bookkeeping and accounting, this is a very important topic. As you can see, there are three columns. First column is the basis of difference, the second column is bookkeeping, and the third column is for accounting. So the first basis of difference is on the basis of scope. So what is bookkeeping? Bookkeeping is merely recording and maintenance of financial transactions in a chronological order, whereas accounting is recording, thereafter classifying, summarizing, analyzing, and interpreting financial transactions in a chronological or date-wise order. And because bookkeeping does only the recording, nothing else, and accounting starts from recording and ends up to interpreting. Therefore, the second basis of difference is stage, the level. So bookkeeping is the primary stage, because obviously the recording has to be done firstly, and accounting is the secondary stage. It starts where bookkeeping ends, because as soon as the recording is done, the rest of the work of the accounting starts. The third basis of difference is who performs. So bookkeeping is performed by the junior staff, who is better known as bookkeeper, whereas accounting is performed by the senior staff, because obviously it requires expertise. So it is better or it is done by the senior staff, who is better known as an accountant. Then the last basis of difference is objective. So the objective of bookkeeping is simply to maintain the systematic record of financial transactions. That means just to record and maintain all the financial transactions in a date-wise order. Whereas the objective of accounting is to ascertain the net results and financial position of the business and communicate them to interested parties. The objectives which we have discussed. That means the objective of accounting is not only recording, but to calculate the net profit or net loss, to see the or interpret the financial position of a business, whether it is solvent or insolvent, which we have discussed the terms, and then communicate all such information to the various interested parties, such as the owners, management, government, tax authorities, creditors, research scholars, etc. So these are the differences between bookkeeping and accounting. So just go through this video once again, children. I hope the topics discussed here are clear to you. In the upcoming video, we'll be discussing with the further topics. So this is the assignment based on this part, which you are required to complete in your register. You have to answer the following questions in your register. Question number 1, you have to define accounting. So for this, what you can do is you can write the definition given by American Institute of Certified Public Accountants as given here, that accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and event, which are in part at least of a financial character, and interpreting the results thereof. You also have to mention the name, that is American Institute of Certified Public Accountants. That means the institute the words of which you are quoting. Then the next question, explain the 4 objectives of accounting. So for this answer, you can explain the objectives which we have discussed here. That is the first objective, to maintain records of business. You can explain as we have explained here. Then point number 2, calculation of profit or loss, as we have explained here. Then point number 3, depiction of financial position, as explained here. And the fourth point or fourth objective, to make the information available to various groups and users, as we have explained here. So these objectives can be written as an answer to this question, because the word explain is given, so you can explain in detail as explained here. Then the next question, define bookkeeping. So for this, you can give the definition of bookkeeping as given by J.R. Bartley Boy. This is the definition given by J.R. Bartley Boy of bookkeeping. That is, bookkeeping is the science and art of recording business dealings in a set of books. And obviously, you have to mention the name of J.R. Bartley Boy, because you are quoting his words. The next question is, state the meaning of financial transactions. So the meaning of financial transaction you will write as, financial transactions are those transactions which can be measured in monetary terms. Then question number 5, you have to state 4 differences between bookkeeping and accounting, or between accounting and bookkeeping. For this, you can take the help of this chart, this table. You can write it as an answer to this question. You can write these 4 differences in your copies, children, as the differences between bookkeeping and accounting. So I hope the topics discussed in this video is clear to you. Go through the video once again and complete all these 5 question and answers in your register. Thank you, children. Do the learning part as well.